In this video, I'm going to show you the exact formula I use to pick stocks in my 20s and how I plan on building wealth as I get older. Now, if you're someone looking to get rich quick or get rich overnight, then this video isn't going to be for you. But if you're someone who wants to build long-term sustainable wealth, then you might find this of interest. Now, the first step is investing into companies that you actually understand. A good example of this is Palantir stock. Now, all the way back in 2020 and 2021, I was investing heavily into Palantir, and I think in total I had a position of around £2,000 to £3,000, which if I would have held on to today would have been, 15, 16, 17, 18 grand, which would have been a lot of money. But the reason I actually sold this investment was simply because I just didn't understand the business model. And, when you don't understand the business model, you don't have conviction because you don't understand why the stock's going up or why the stock's going down or exactly what you're investing into. So it's hard to have conviction unless you completely understand what you're investing into. So that is the first step. Make sure you can understand the business model. And if you can't explain it in like 5 simple sentences, then you don't understand it well enough to invest into. And the second point is investing into companies with wide moats. Now, what exactly does this mean? Now, a wide moat is a company with a competitive advantage. And 2 examples I always like to talk about are Visa and MasterCard. Now, these are probably 2 of the most monopolistic companies in the entire world, as they basically dominate the payment network transaction sector. So Visa and MasterCard don't actually take on the debt of the customer. They simply are just the network where transactions take place. And every single time you tap or swipe your MasterCard, they will take a very small transaction. But because this happens at such a large scale, with millions and millions of transactions happening every single day, these small amounts add up. So aside from maybe companies like Discovery and American Express, Visa and MasterCard have little to no competition. So you want to try and find these companies as if they have a huge competitive advantage. It allows them to do things such as pricing power and have things such as network effects, which are huge monopolistic traits. So to sum up the second step very simply, I just want to invest into companies that other companies can't compete with. The third step is investing into companies with high free cash flow. Now, very simply, free cash flow is the profit that the company keeps after all their expenses and the taxes and everything like that. So companies with a lot of free cash flow can either do things such as share buybacks, pay a dividend, reinvest it back into the company. There's many different avenues, but it basically means they're a very, very profitable company. So if a company has a high profit margin or a high net margin, this means they will keep a large majority of the money, which usually means in a lot of cases they'll produce a lot of free cash flow. So this is another metric to look out for. So you don't just want to simply invest into a stock because there's a lot of hype around them. For example, you've got a lot of companies that are very, valuable, such as Palantir, but in terms of the free cash flow that it produces is not very high. Now, of course, a lot of people are trying to predict that in the future, a company like Palantir will produce a lot of free cash flow, but at the current time, they're extremely expensive. And on the complete flip side of this, you've got a company like Google who produce a lot of free cash flow. They're a very quick growing company and they're only trading at a PE ratio of 20. Now, this basically means price to earnings. So that price the stock is trading at is about 20 times their earnings. And in this day and age, for a tech stock like Google, a PE ratio of 20 is very, very cheap, especially when compared to a company like Palantir, who's trading at, a 500, 600 PE ratio. So the third step, summed up very simply, is investing into companies that produce a lot of free cash flow rather than just trying to chase the hype stocks. The fourth tip is investing into companies with a proven track record. Now, when I invest into stocks, I'm not looking for, the next big thing. I'm just looking for a company with a proven track record, has performed well historically. Now, of course, historic performance isn't necessarily an indication of the future, but it can also be a good sign. So say in 2008, when there was a huge recession, a lot of companies would have gone out of business then, but other companies would have thrived or, survived at least. So if you can look at companies with a proven track record that, can survive things such as recessions or what happened in 2020, then this will give you a lot more conviction and a lot more faith in your investments. And it will also help you sleep at night knowing that if something bad happens, the company has enough free cash flow or at least enough cash in the bank to survive, this sort of bumpy ride. And the fifth and final tip is invest into companies that are scalable. So if you invest into a company that is scalable, it basically means they're not just restricted to one industry. So for example, a company like Amazon is amazing because they have the e-commerce side of the business, they have the cloud computing side of the business, they're investing money into chips, they invest into robots, AI, autonomous vehicles, all these different things. They're a very diversified and a very scalable business. And the way I look at it is like, if a company is scalable, it's kind of like its own little mini ETF. It's not, necessarily stuck to one single sector. And the more diversified a company is, usually the less risk associated with it. So that is how I invest in my 20s, steady, simple, and with a long-term mindset. And if you did enjoy this video and want to see more finance videos like this, make sure to follow my page and double tap the screen.